In today's video, I am going to be breaking down what I think is going to be a massive buying opportunity very, very soon. So as we all know, Elon Musk, he is probably going to be selling 10% of his shares in Tesla. Now, this is apparently to deal with some tax issues because he has apparently like a $15 billion tax bill, which is crazy. Like, that blows my mind. But either way, that's a lot of money, and because of that, he has to sell his options, sell 10% of his shares, and of course that is going to essentially take down that price of Tesla by at least a little bit. There's a lot of buyers when it comes to Tesla right now. They've spiked from $500 to well over $1,000 over the past month, and that is crazy on its own. So we're going to be talking about a couple of different things right now. So, of course, Elon Musk is probably going to be selling 10% of his shares in Tesla because of a Twitter poll. Kind of weird, but either way, he's probably going to do it anyways. Well, anytime that a stock is not doing this and basically going like this, or in general, when you've got a stock that goes like this, and the next day it goes like this, and the next day it goes like this, usually those gaps have to be filled, and that is probably what is going to happen. The stock has ran so much recently that anytime that there's gaps, they usually get filled, both on the going down as well as when the stock is going up. And when that happens, they are usually good buying opportunities, and that is what I am saying today. It's not just because Elon Musk may be selling a lot of shares. It is going to be a combination of Elon Musk selling shares and the fact that the stock of price of Tesla has just gone through the roof. Anytime that there's gap ups, they usually get filled, which just basically means, for example, if the stock's going up and then the next day it goes up like this and then it goes like this, the next couple of days what's going to happen, or maybe weeks later, is it's going to fill those gaps and then it's going to slightly rise back up to where it was before. That is usually what happens. It's going to fill these gaps and then it's going to rise again. Where will we see this bottom out? Maybe around $800 or $900, which is still not that bad, but if you've bought it at $1,100 a share, it's going to be painful for a bit, but just average down. So there's a few different ways that you can actually play this trade. Number one is Tesla itself. You could just buy their stock. When it goes down, you could buy. That is the most obvious choice that you could do. Another option is something like an ARK Innovation ETF, ARK-K. Now, this is a good, interesting option because while you are invested in Tesla, you also get other investments with this. So what you are essentially getting is 10% of what you are investing in is essentially Tesla, 9.5%. That's huge. From there, what are we looking at after that? Well, you are getting a lot of futuristic companies. Shopify, Zoom are going to be always here in the future, and it looks like maybe Facebook in the meta world might be trying to go after Zoom, but either way, it's still here. And then there's Coinbase, which is of course Bitcoin, which is something that Tesla is also invested in. See, the reason why Tesla's stock price went up so big was actually, there was a few reasons. Number one, they had fantastic earnings. Number two, there was the news story about the Hertz car order of 100,000 cars. That'll probably happen, but Tesla can't keep up with their orders as it is. So an extra 100,000 cars is really probably not going to do much. And then from there is the third reason is Bitcoin. Bitcoin has again gone through the roof. Tesla has a ridiculous amount of Bitcoin, and of course, that is another way that you are literally investing in Tesla. You're not just investing in a car company. You are investing, I've said this millions of times before, in a solar company, in a battery company, in a power electric company where they are basically putting out solar panels and essentially selling the electricity back off to the grid. And they're doing that in Australia. They're doing that in different areas in the States and in China. So from there, it's actually a very diverse investment if you're investing in Tesla. You also get some Bitcoin because Tesla has a lot of Bitcoin. So from there, you're basically, just Tesla alone is investing into an ETF if you really think of it that way. But by investing into an ETF like ARK-K, that invests in other aspects of the world, I guess you could say. Looking at financial companies like Square and online internet companies like Shopify, it's fantastic. You're getting literally everything that's going to happen into the future. The only thing with ARKK is the fact that the MER is 0.75%, which means that for every essentially $100 that you're going to be spending, it's 75 cents a year, and then of course if that increases, so does this. So keep that in mind. If you're investing in Tesla on its own, there's no MER. When you start buying ETFs, there is. This is just a really short video on what was going through my mind this morning, and I hope that you've enjoyed. If you have, hit that like button, subscribe, and I'll see you guys again next time.